we are in the QBO gym. And the QBO gym is a place where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you're looking to work on your bookkeeping skills, this is the place for you. And if you want to do some of these on your own, do a little bit more of a deep dive, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's get into today's exercise, which is pulled from our April Year 1 cardio section, where we are really focusing on those basic skills. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner. Further down is an interactive pre-assessment quiz that relates to the video that you watch up above. Below that are the exercises in this section. And at the bottom here, after you have gone through all of the exercises in this section, you will unlock some marketing sample posts that you can use on your LinkedIn to share with everybody what you have learned so far. So let's get into today's exercise where we are going to practice making a loan payment. Go ahead and click on that link to get the exercise pulled up for you. I have it over here on the right side of my screen, so let's read through our scenario. Renting equipment was getting expensive, so Craig took out a small loan of $4,000 to buy his own. He tells you he already entered it in QBO and that the monthly payment of $144.61 just needs to be scheduled for the 20th of each month. So let's see how to do this. You will need to be in the sample company to do this exercise. If you are not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link in the description. I have the sample company pulled up here. Once you sign in, this is what it will look like. It will take you to the dashboard. So let's get started with the exercise. Now for this exercise, you will need to click on the link beneath the animated cardio video to grab a copy of the loan statement, as we'll need it for this exercise. So if you go back to the gym here and scroll back to the top, you will see the animated video right here. There is a button underneath that says loan statement. You would go ahead and click on that to download the loan statement. I have it pulled up here. Once you do download it and open it, this is what it will look like. All right, so let's get started. First, we need to go to the chart of accounts. So to get there, we're going to click on Accountant Tools and then select Chart of Accounts. So the Accountant Tools right here, go ahead and click on that. And then under Quick Links, select Chart of Accounts. Let's filter by name so that we can look for the loan that Craig had set up. So in the filter by name or number field, we're going to type loan, which is right here. Go ahead and type loan into that box, and you will see that there is one loan that is showing here. Now note that Craig set up this account as an other current liability. This should only be used for liabilities less than 1 year, but as you can see from the statement, Craig's loan is for 3 years. Here's the end of year 1, year 2, year 3, and it is a 3-year term. Now, if he intends to pay it off quicker than the loan requires, then perhaps it could stay in this account. Otherwise, it should be a long-term liability. So let's see what Craig did in this account. We are going to click on View Register to get more information about it. If you get any pop-ups, just go ahead and click out of them. It's just QBO being extra helpful for us. All right, so as we can see here, Craig created a journal entry, and yes, clients will do this sometimes. So let's see where the money went. We're going to click on Split and then Edit. So Split is right here. Go ahead and click on that, and then go ahead and select Edit. And this will pull up the journal entry that he had created. Now, the first part of Craig's journal entry is correct. He credited the loan payable, meaning he increased the amount of the liability. So this loan payable is in the credits, column, which is correct because a liability is something that you owe. So he has increased it because he put it here in the credits column. The second part, however, is not correct. Opening balance equity is used when you or QBO do not know precisely where the money went. This is typically seen, for example, when converting from one accounting system to another. In this case, you may not convert the details of every transaction in QBO because they are already recorded in the old system. But that is not the case here for Craig. Craig took out the loan, so he should know where the money went. Did it go directly toward the purchase of the new equipment, like when you purchase a car, or did it go into his bank account? So you ask Craig about this, and he confirms that he actually deposited it into his checking account, and he does intend to pay it back this year. So he's planning to pay it in a year's time, which is why he has it as an other current liability. So the only adjustment that we need to make here is just changing the account. So we're going to click on Open Balance Equity to change it and then select Checking. So click into this on the second line under Account, click into that Opening Balance Equity, click the down arrow, and just scroll up towards the top here and you will see Checking. Go ahead and select that. Now, in the memo field, let's go ahead and describe why you are changing this out of the opening balance equity. So in that memo field, we're going to type opening balance equity dash deposited in checking account for the purchase of equipment. So if you scroll down to the bottom of the journal entry, you will see that memo field, and this is an internal note here. So opening balance and then dash, and then we're going to say deposited in checking account for the purchase of equipment. So deposited in checking account for the purchase of equipment. So now we have fixed this journal entry. We are going to click on the down arrow next to Save and New and then select Save and Close. That down arrow over here on that green button, go ahead and click on that and then go ahead and select Save and Close. Now, as soon as you do that, you will get this pop-up warning from QBO, and it's just warning you that you're changing a transaction that has already been reconciled. As previously discussed in a previous exercise, opening balance transactions are always automatically marked as reconciled. So even if you didn't do a reconciliation, it is automatically, because it's opening balance equity, it is automatically assumed that it is reconciled. So since you have not actually reconciled this account, this will not affect you. You will eventually have to reconcile the deposit to the checking account, but that's not what this message is referring to. So we're good to go ahead and move forward with this. Go ahead and click Yes. That's the green button right there. And now that has been adjusted. So now that the loan is set up correctly, it's time to schedule the first payment. Craig said it will automatically be debited each month on the 20th. You could set up a recurring transaction for this, but remember the principal and interest will be different for each payment, and you can see that here on the loan statement. Each month, as he's paying down the loan, the amount of the principal and the interest are changing each month. So, where was I here? So you have the details on the loan statement as I just showed you. So you could conceivably set up a precise transaction for each of the 36 payments. Not only would that be tedious though, but Craig is planning to pay the loan off early, which again would change the principal and interest split each time. So even if you wanted to use this and set up 36 different payments, if he's paying it off early, this is going to change. So this would become irrelevant in terms of a reference tool to create those transactions. So another option would be to set up a reminder to enter the details each month, similar to a daily sales summary. And yet another option would be to enter the details of the first payment, then wait for it to show up in the bank feed. Once you know what it looks like in the bank feed, you can set up a bank rule to automatically split it. Then, when you see it come across, you could adjust the split so it matches the loan schedule. But this is a lot to worry about right now, and it can't fully be implemented here in the sample company. So we're just going to set up the first payment and then a reminder for each month. So to do that, we're going to click on the plus new button and then select expense. So if I go back into the sample company here, the plus new button up here, and then under vendors, you're going to select expense. Now we need to add the loan company as a vendor. And this is example bank USA is the name of the bank. So in the payee field, we're going to type example bank loan. This is bank loan. Either way is fine. And then do a plus add new. So let's do it the way the exercise says right here. Just go ahead and click into that payee field. Go ahead and type example bank loan. And then we're going to add it. So go ahead and click on the plus add new. And this vendor profile card will appear. Now, it's always a good idea to fill out as much information as possible about the vendor or the loan. And there's lots of places to add things here. But for now, we're just going to add the attachment or attach the statement. So we're going to click add attachment and then follow the prompts to add the loan statement to the vendor record. So in order to do that, you're going to go ahead and click on add attachment right here. And then once you find, you'll have to probably do a search in your folders to see where it is. But once you find the file, it may be in your downloads file, or you may to, if it showed up here in your URL browser, you may have to actually download it from there and then search for it in your downloads file. But once you find it, go ahead and click on it and then select open. And you will see that it has been attached for you. So now we are all good to go here. We are just going to click on the green save button. So go ahead and do that. And now we have them set up as a new payee. Now use the loan statement to complete the category details grid. Remember, this is the first payment. The principal will be recorded to the loan payable account. Since the sample company does not have an interest paid account, you can go ahead and just use the bank charges account for now. But in a real life scenario, you may want to set up a separate account so that you can record the interest charges separately from any other bank fees that you may need to record for other things. So let's go ahead and fill this out. In the category field, on the first line, we're going to select loan payable. And again, this is for the principal. So if you click into that box, go ahead and start typing loan to have loan payable show up for you. Let's give this a little bit more description. We're going to type principal. So go ahead and click into the description field and then type principal. And now in the amount field, we're going to type $84.61 because if we look back here, that is what the principal is showing us. So go ahead in the amount field, type $84.61. And now let's go ahead and add in the interest. So on the second line in the category field, we're going to select bank charges. So click into it. You can start typing bank charges for it to show up for you. Once you find it, go ahead and click on it. In the description field, we're going to type interest. So click into that. Go ahead and type interest. And the amount for this one is $60 this first month. So go ahead and click into the amount, type 60. And if you hit the tab key over, you will see that QBO is making the calculation for us for that total of $144.61, that payment. Now let's go ahead and save this. So go ahead and click on the black save button. And as just a note here, we didn't do anything with the payment account or the payment date. The payment account would be checking because that's where he is paying this from. The payment date defaults to today, but of course in real life, you would want that to match the date of the actual payment. All right, so as discussed previously, there are a lot of options to efficiently record loan payments. For the purposes of this exercise, we're just going to create a reminder each month. We'll set it up for the 15th, which is a few days before the transaction should hit the bank. So let's go ahead and click on Make Recurring. That is down here in the middle of the black bar. And when you do, this information will appear for us. Again, this is going to be a reminder. So in the type field, let's go ahead and select reminder. That is right here. Go ahead and click on that and then reminder. And then we want that reminder on the 15th. So since the payment is made on the 20th, we want to type 5. It's 5 days prior to when the transaction actually hits. So go ahead and type 5 in that box. The interval date is the 20th. That is when it is being paid every single month. And so we want to have that as the interval so that QBO knows that the 5 days before is 5 days before the 20th. So in that field, go ahead and select 20th. And then on the end field, we're going to select after. So right here, we're going to say after. And then on the occurrences, we're going to say 35. So after 35 occurrences, reminders, months, it has, now we will not have that reminder anymore. In the amount field, we're going to type 0 for both lines. Remember, these numbers are going to change each month. So just to make it a little bit easier so that you don't get confused or anything like that, you can just type 0 in this one and 0 in this amount. And then each month, as you need to make adjustments, it's easy enough to just add it in there rather than trying to change what we had the month before. It just makes it a little bit more confusing. So having it start with 0 right here definitely makes it easier when you are going to be recording this each month. And that is it. So go ahead and click on the green Save Templates. And that expense has been saved. You can see that first payment is showing here on the for the accounts, the liability account. And that is it. That is how you would make a payment, a loan payment, and you would set up that reminder. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We move through the cardio section with our next exercise where we practice recording deposits. And I will see you in the next video.